Investing in stocks and bonds is a great way to build wealth over time and secure your financial future. But for many people, the prospect of investing can be daunting. Where do you start? What should you invest in? How much risk should you take on? The first step in investing is to determine your investment goals. Are you looking to grow your wealth over the long term, or are you more focused on generating income in the short term? Once you have a clear idea of what you want to achieve, you can begin to think about the types of investments that will best help you achieve those goals. Stocks and bonds are two of the most popular types of investments. Stocks represent ownership in a company, and their value can rise and fall depending on the company's performance and the overall state of the economy. Bonds, on the other hand, are a type of debt instrument, and their value is based on the ability of the issuer to repay the debt. When it comes to stocks, it is important to diversify your portfolio by investing in a mix of different companies across different sectors and industries. This will help reduce your risk and increase your chances of seeing a return on your investment. Additionally, it is important to research the companies you are considering investing in and to stay up to date on their financial performance and future prospects. When it comes to bonds, the key is to focus on the creditworthiness of the issuer. The lower the credit rating of the issuer, the higher the risk of default. Therefore, it is important to invest in bonds issued by companies with a strong credit rating and a history of repaying debt on time. Additionally, it is important to consider the maturity date of the bond and the interest rate. Ultimately, the key to successful investing is to have a well-diversified portfolio, do your research, and have a clear understanding of your investment goals. It's also important to remember that investing always carries some degree of risk, and it's important to be prepared for market fluctuations. But with a little bit of knowledge and a long-term perspective, anyone can start building a solid investment portfolio that will help secure their financial future. Another important aspect to consider when investing in stocks and bonds is your risk tolerance. Different types of investments carry different levels of risk, and it's important to choose investments that align with your ability to handle risk. For example, if you're a conservative investor, you may want to focus on investments that have a lower risk profile, such as bonds or blue-chip stocks. These types of investments may offer less potential for growth, but they also have a lower chance of losing value. On the other hand, if you're a more aggressive investor, you may be willing to take on higher risk in exchange for the potential of higher returns. In this case, you may want to consider investing in small-cap stocks or emerging markets. It's also important to think about the time horizon of your investments. Short-term investments, such as day trading or speculative investments, may provide the potential for quick gains, but they also come with a higher level of risk. Long-term investments, such as retirement accounts or real estate, may provide slower growth, but they also come with a lower level of risk. Another important consideration when investing in stocks and bonds is the cost. The cost of investing can significantly impact your returns over time. Avoid high-cost mutual funds or actively managed funds, and instead opt for low-cost index funds or ETFs. These types of funds will provide broad market exposure at a lower cost. Finally, it's important to remember that investing is a long-term game. It's not about trying to time the market or make a quick profit. Instead, it's about building a diversified portfolio and sticking with it over time. It's also important to regularly review your portfolio and make adjustments as needed to ensure that it continues to align with your investment goals and risk tolerance. With a little bit of patience and discipline, investing in stocks and bonds can help you reach your financial goals and secure your financial future. Another important aspect to consider when investing in stocks and bonds is tax implications. The way you structure your investments can have a significant impact on your tax bill. For example, if you hold stocks and bonds in a taxable account, you will be subject to capital gains tax when you sell your investments. However, if you hold those same investments in a tax-advantaged account, such as a 401k or an IRA, you will not have any gains until you withdraw the money. Additionally, it's important to consider the impact of taxes on your bond investments. Interest earned on bonds is generally taxed at your marginal tax rate. However, if you hold municipal bonds, the interest earned is typically tax-free at the federal level. Another important point is to be aware of the fees associated with the investment. It's important to read the prospectus of a bond or stock fund to understand the fee structure and how they are charged. Some funds charge an upfront fee, while others charge an annual management fee. Some funds are also more expensive than others. It's important to understand the fee structure and how it impacts your returns. Another important aspect to consider when investing in stocks and bonds is the role of a financial advisor. A financial advisor can help you develop an investment strategy that aligns with your goals, risk tolerance, and time horizon. They can also help you navigate the complexities of the investment world and ensure that your portfolio is well diversified and balanced. In conclusion, investing in stocks and bonds is a great way to build wealth over time and secure your financial future. However, it's important to have a clear understanding of your investment goals, your risk tolerance, and the tax implications of your investments. Additionally, it's important to diversify your portfolio, stay up to date on the performance of your investments, and consider the role of a financial advisor in your investment strategy. With a little bit of knowledge and a long-term perspective, anyone can start building a solid investment portfolio that will help secure their financial